Good morning, everyone. Welcome. I just want to hop on real quick. Give me just a few more minutes and we'll get started. I want to just refill my coffee and get a drink of water. Good morning, everyone. While I'm here, just want to do a quick mic check. Make sure the mic works. Please type a 1. It sounds like. Randy confirmed that. All right, excellent. Thank you, guys. Just give me a couple more minutes and we'll go ahead and get started. All right, everyone, thank you for your patience. Ready to rock and roll. Looks like the mic is working. Excellent. All right, welcome to this week's edition of Pro9 Insider. Our goal here is to make sure everyone is up on the rules and the money management strategy to trade Pro9 Trader effectively. Of course, we want to answer any questions, so feel free to throw those out. This is a live Q&A session. I do like it to be kind of interactive. So feel free to ask any questions that pop up, whatever level you're at. There are no bad questions, and you never know, the question you ask may be something that someone else was wondering or didn't even realize they had to ask yet. So, all right, and without further ado, let's jump into it. So, fortunately, the markets have been kind of a snooze fest this morning. Well, I guess the NQ has probably been doing pretty decent. Yeah, we had a nice run up here on the NQ. Pretty textbook continuation here. So this will give me a good opportunity to walk through the money management strategy as well as kind of go over the different entry points. So let me just get my rules up here. And there we go. All right, so all right, so we did have this continuation as well, but this is a perfect example. Well, even though this one succeeded, we don't enter trades heading into this 200 EMA. It can always act as a point of support and resistance. So we want to avoid that. I feel it's pretty common practice in trading anyhow. So something to be wary of. This example as well. Now, while this momentum was a bit past the 200, what I want to look out for here is that I had my 200 right on the high of the day, so I'm a little reluctant to enter any trades past that. I just feel like we'll just get sucked right back in and hover around the 200. So something to keep in mind when I got the 200 stacked on the high of the day or the low of the day, depending on which direction we're looking to get in. I'll just avoid that. So 200 is a pretty strong line of support and resistance. So I do want to illustrate this continuation entry point. So let me just rewind it a bit here so we get so something I like to stress in these classes is anticipating the trade setups. So we don't need to wait for the bars to close before we qualify a trade setup. We can anticipate them. That way we can have our order in ahead of time, so we're not chasing trades. So I feel like when we get into the situation where we're chasing a trade, it can cause us to make mistakes, and we want to avoid those whenever possible, of course. So basically I'm starting to see a long trend develop, had this decent little continuation. Even though we didn't enter it, the trend is still starting. My super trend is starting to get stronger. It's outside of its neutral zone. My purple line is outside of its neutral zone. So all these are looking pretty good, telling me that the long trend seems to be picking up steam. So at this point, I just had a short little run up. I have a turn bar. So now I can start looking out for a continuation long. For a continuation, I need to see either this turn bar followed by another turn bar indicating we're going to go long again, or this type of situation where I have a turn bar, color bar, turn bar. So either of those would be a configuration of the bars that we'd identify as a continuation. So at this point, I want to run through my rules. I see my 3 EMAs are in the correct order. My 10 is above the 20, which is above the 50. Now the 200 does not need to be in the correct or in the correct order with the other EMAs for the continuation. The setups are stronger when it is, but it's not a requirement. And this is one of the main things that differentiates the continuation from the single T. I need to see my blue line above my purple line, or my blue line value greater than the purple line value. My super trend needs to be outside of the neutral zone, which it is. And then I need to see my white turn bar. And I'm going to enter on the green DPI price. Now, not this turn bar, because this would indicate we're heading short, and this bar is already closed, so that wouldn't be any type of entry point. So I have my color bar here. I can still look for a continuation. My EMAs are still in the correct order. My super trend is still outside of its neutral zone. My blue line did dip below my purple line here. So it's a bit far, so I'm not sure it's going to cross. So I may want to wait for this turn bar or for this next bar to complete and see if it plots as a turn bar. In the direction I want and attempt for a retracement or enter on the first color bar. Randy asks, when you see the blue line heading south, doesn't that concern you? Not necessarily, because I expect to see that when we have a short reversal. And the blue line is a fairly fast-moving indicator, so it'll correct in the appropriate direction rather quickly if I do get this bar plot as a turn bar as we're anticipating. So, and I do rather like sometimes the blue line bouncing off the purple line or just underneath it, or bouncing off the zero line. So I more like to know when the blue line comes from extremes and like to watch it that way to help me avoid chop. I'm really not too concerned with these short little jumps down and return to an extreme. So, I mean, you'll see that pattern fairly often. So, then I do have my turn bar plot. See, my blue line does get to the correct side. So now my trade is fully qualified. I did have to wait for this bar to plot to confirm that. So I could enter at the DPI price that closed this bar, which would also be one tick above the high of this bar. So that would be 59.77. Or I could enter on the first color bar, which would be 59.78. So I like to attempt to retrace on the earliest entry point when possible. Not always going to happen, but often enough we can. And if I have to enter on the first color bar, that's fine as well. But going back to my blue line here, I do want to stress something, that when it gets past a certain distance, we're not going to be sure that it will cross. So I always follow the rule, if I'm not sure, wait for the bar I'm looking to enter on to complete, and then either attempt a retracement or enter on the first color bar. It's much safer to wait than to jump the gun, enter when we're not sure that rule is going to be qualified, and then once that bar closes, since we're entering on the DPI price, then we could find ourselves in an unqualified trade. And I've had that happen to me a couple times, which all it takes is a couple times, and then you break that habit real quick. But just in general, it's not really worth it to jump the gun on the off chance. Now there are times where my blue line did dip just below right here, but if the market moves up, I'm 100% certain this is going to be above the purple line because it's right on top of it. So there are cases where it's very close, and it really just comes with chart time. There's not really an effective way to know how far the blue line will move every time it plots. It depends a lot on the price action that happened during that bar. So back to our continuation trade here. So we enter at this DPI where we enter with 3 contracts. We're looking for an 8-tick profit target with our 22-tick stop, which is the opposite color DPI. Now, after the trade moves 4 ticks in our favor, we can adjust our stop from 22 ticks to 18 ticks. Since the market moved 4 ticks, we're just going to move our stop up 4 ticks. Help to protect ourselves a bit, tighten the stop a bit, mitigate any loss should the market reverse. And then once the second bar plots, that'll be our 8-tick profit target. I know this because it takes 4 ticks in the direction of the trend to plot a new color bar. Will always hold true. So it's a really easy way to figure out when our profit target is hit. Now, that's when it's hit, not when it's filled, mind you. There are times when in a very fast-moving market, your entry price will just get touched real quick, but not filled. So it's been happening to me fairly often on the NQ recently. And for this reason, we do recommend that after the profit target is hit, you want to adjust the stop on all 3 contracts to break even. This is to protect ourselves a bit in case the market reverses very quickly. It would be a scratch rather than a loss should the market reverse all the way to the DPI, which doesn't seem to happen that often, but when it does, you don't want to be in the situation where we had a winning trade, our profit target was reached, and then because our profit target wasn't filled, the market reverses and stops out, and we take a loss on what would otherwise be a winning trade. So that never feels good. So for that reason, we do recommend to adjust your stops to break even. If you're still willing to incur a little bit of risk on that, maybe break even -2 to give you a little bit of wiggle room. But I don't find it something that happens too often anyhow, but just in case, you want to have that bit of protection. It's much better to take a scratch or lose a couple ticks than take a full stop that was unnecessary. So after our 8-tick profit target is reached, we will adjust our stop to break even. And assuming that our profit target was filled, we only have 1 contract now, and this is our runner. We leave it at break even until the 4th bar from our entry bar plots. Then we'll begin trailing at the low of the previous bar. So in this case, we only get to this bar 5, which likely will stop us out because our entry is 59, call it 77. The low of this bar is 76.5. But we do have another momentum entry. And this is really what these trades are for, is to give us opportunities to hop in runs that we either aren't able to hop in at the beginning of the run. Maybe this trade wouldn't be qualified in a different situation. So we don't have our first entry till here. Or if we get stopped out by the momentum, then we have another opportunity to hop back in this trade. So we grabbed our 8 ticks from this little short jaunt. We get a little bit of a pullback, and then we have another entry. And the momentums are probably the easiest trade to qualify. Most basically, if I have a green background and a purple bar, that is a momentum long. The green background simply tells us when the 10, 20, and 50 EMAs are in the correct order. And my blue line is above the purple line. And as we look, those are 2 of the rules I need to see to qualify my momentum trade. And I need to see my purple bar, or if you're using the momentum arrows, which are optional, then that's the indicator you'd want to look out for. So now with the momentum trade, we're looking for a 6-tick profit target, and we have a 15-tick stop. So my first bar plots, that's 4 ticks. I'm not going to adjust my stop 4 ticks as with the other one. I want to leave it at 15, just in case there's a little pullback. I've noticed that adjusting it to 11, I did experiment with that when we first released the momentum trade, and it just doesn't work out in the long run. So you end up getting a lot of wicks that are like 12 or 13 ticks, and if you just left it at 15, we're only looking for 2 more ticks, so I don't think it's worth it to, while it seems like it would be a good idea to do that to protect yourself, sometimes it's better to actually have a wider stop. You get stopped out less often, even though you take a bigger hit than you do, but I would rather take one 15-tick stop than 2 11-tick stops. So, makes sense. Then we hit our profit target somewhere before the close of bar 7, adjust our stop to break even, assuming we don't get a retracement to our entry price for the sake of this example, so we can walk through our money management strategy. So once the 4th bar from our entry bar plots, this is when we begin trailing at the low of the previous bar. That's what these gold numbers here tell us, the high and low of the most recently completed bar. So once that 4th bar closes, I want to adjust my stop from break even and just move it up a tick. My entry on this bar would have been 59.81. That's 1 tick above the high, which would have been the DPI price. So 59.81.25 is the first point where I'm 1 tick above my break even. The next bar plots, I want to adjust my stop to the low of that bar or move it up 4 ticks. And then once my 6th bar plots, this is where I can actually adjust to the red DPI price. So it will be, I do widen my stop a bit, but this does give us the best opportunity to take part in the entire run should the market take off, right? The red DPI, if I use the opposite DPI as my stop, the only thing that's going to stop me out is a full turn bar, right? Any wick that comes down to 21 ticks, I'm going to ride right over that. So if it ends up turning into a situation where we get a lot of wicks along the run, there's a lot of pullback, we can just avoid that entirely and just keep adjusting to the new red DPI as the market continues to move. So now, that's not always going to be the case, of course. There are pros and cons to either strategy. There will be times when we adjust to the red DPI, and wouldn't you know it, the next bar is a turn bar. So instead of grabbing my 7 ticks by trailing at the low of the previous bar where I was at, now I only grab 2 extra ticks with my runner. You know, I feel that that's worth it for the opportunity to catch these really long runs when they do happen. So now I'm just trailing at my red DPI price. Should be 59.82.5. So as the market continues to move long, I'm basically just going to move my stop up 4 ticks after every bar plots. If we continue moving in the direction of the trend, the DPIs will adjust every 4 ticks, because that's what it takes to plot a new bar. And I keep adjusting it to the red DPI right over this wick right here, because remember, the only thing that's going to stop me out is a turn bar. If I had decided to trail at the low of the previous bar, I would get stopped out right here. Now I could hop back in on this momentum trade, certainly, but the longer a run goes on, the momentum trades do become more risky. So I like to avoid that. I don't want to have to make this decision on bar 20 if I should get back in the run. I want to make that decision back here when I widen to the DPI, accept my fate, whatever that's going to be. If the market continues to move, great. I'm in a good position to catch as much of this run as possible. If the market reverses right there, plots a turn bar, I grabbed a couple extra ticks with my runner, and I wait for the next opportunity. And again, you just keep trailing at the red DPI. This was a beautiful run in the NQ. Probably the best move I've seen in a couple days. Markets have been kind of off and on, choppy or just slow lately. So, and then we finally get stopped out here because we were trailing at the red DPI, and we finally did see a turn bar. But we did have an opportunity to take part in pretty much the entirety of this run. So I don't think there was any news around there. There was 10 a.m. news. And then after that, the market just kind of slows down. We do have a few surf opportunities with these very small wicks here. Could have grabbed a couple extra profit targets. The surf trade is probably my favorite trade. It is rather new. We released it maybe a month and a half ago, somewhere around there. Now there is quite a bit of overlap with the surf trade and the momentum trade. So in the cases where a surf trade agrees with the trend and would qualify as a momentum, it's really immaterial because they use the same money management strategy. They have a 6-tick profit target and 15-tick stop. So I don't know that it adds any additional qualification. It's just qualifies as two trades because there's some overlap. Where the surf trade really shines is on these counter trend moves here. So after a nice trend, then we get a reversal, and where previously we had no way to enter these runs other than a divergence reversal up here, but those are fairly uncommon compared to the frequency of the other trades. So the counter trend surf is a bit more common. They don't happen necessarily every day, but I do usually see a good 3 or 4 of them a week, maybe 3 a week on any given market. So they're not super common, but you will see them fairly frequently, and they're really strong trades. I don't see them get stopped out too often, but of course it's going to happen. It's a bit, when you start looking for the surf trade, it's a bit different from our other trades that we look for, mainly in that we do often catch them in the situation when the market's reversing. So what we need to look for is my blue line below the purple line and outside of this neutral zone. I need the blue line to be outside of this neutral zone in the appropriate direction, or the direction I'm looking to take the trade. So if I'm looking to take a surf short, this needs to be below -50. And if it's down that far, it's likely to be below the purple line as well. Next, I need to see my super trend outside of its neutral zone. Now, I think this is the part that kind of trips people up at first, and that this doesn't need to be outside of the neutral zone in the same direction we're looking to take the surf trade. And these surf trades on the counter move right here, you'll often see it outside of the neutral zone in the other direction, because the super trend, as we see, is coming from an extreme. It was very bloated all the way up here at 100. So it's going to take a while before it reverses and even starts plotting red. So the only thing we care about is that it is not within this gold range. And after that, we can enter on any bar with a wick or a tail, depending which direction we're going. This can be a turn bar if all the other rules are qualified. It can be a purple bar, which will most likely be a momentum trade as well, or just a regular color bar with a wick like we have here. This wick is very small and hard to see, easily could have been missed. We do have this wick that's a little taller, still qualified at this point. These ones didn't really run that long. You know, they're nothing to write home about, but still do grab our 6-tick profit target here and another 6-tick profit target here as well. So, and then by this point, see, we have a third tail. So if we entered this trade, hit our profit target, it retraces. We're not going to get in on this one, and this looks like where it runs out of steam, and we're not going to get in because if we come down here, looks like my super trend is right. Yeah, it's within the neutral zone now. So you can kind of see the power of needing this or for the necessity of that rule. It's a pretty strong indicator. So now I do like to spend some time covering our DPI indicator. So this will always be what we base our entry prices on. Oh, Randy asked, did you say the continuation trade was the only one dealing with background colors? No, actually a lot of them can rely on the background color. The thing about the background color is that it's basically just a confirmation of two rules wrapped into one. So it makes it easy to identify if my 10, 20, and 50 EMA are in the correct order, and in addition, if my blue line is on the correct side of the purple line, that will cause the background to plot. So it's just an additional indicator that kind of wraps up two qualifications in one. So the momentum trade, it makes it really easy to qualify the momentum trade, makes it easier to qualify the continuation trades. It does help with the single T, although we do still have to check if the 200 is in order for the single T. So just an additional way to help simplify the qualification of some trades. So there are some trades that will appear when there is no color background. Those are the divergence reversal, a counter trend surf trade, or a dot trend. Those will often appear with no color background. Breakouts can also appear with no color background, but that's quite rare. Usually when you see a breakout, there's going to be some kind of established trend anyhow. So, all right, so our DPI indicator, I do like to spend some time on this. It is very important. Understanding this indicator and really getting familiar with it can save us a lot of headaches and can help us anticipate these much easier. All our DPI indicator is it simply tells us what price needs to be reached to plot this bar. And depending on the current direction of the market, that will tell us what type of bar we'll plot. So in this case, I just had a turn bar short, indicating that we've reversed from our long direction. So if I hit my red DPI, I will plot a red color bar. If the market reverses and hits my green DPI, I will plot another turn bar. So knowing this lets me anticipate or form a plan of action of what I may want to do if one of these prices is reached. And I actually like to break it down and have a decision step for am I going to do anything if the green DPI is reached? Am I going to do anything if the red DPI is reached? In this case, it doesn't look like it. Nothing's really set up for a long. My super trends in this neutral zone, kind of underneath these. You know, my EMAs aren't in any order. So there's not really any action step for me to take. So I can say no. And then once you get really familiar with this, I actually take it a step further and say, okay, well, what if I hit my green DPI? What happens on the bar after that? because if I hit my green DPI, I know that 4 ticks later will be my next green DPI, and 22 ticks in the opposite direction of that price would be my red DPI at that point. So I actually like to plan ahead 1 or 2 bars, and it's good to check just so I know if I even have any action steps. Like in this case, I know I don't have any action steps because nothing's lined up either way, but just quickly, figuring that out with my DPI indicator, I can turn my attention to other charts, because I do find it's common for people to watch, at least 2 charts, and depending how many monitors. I know some people have the full 6 monitor setup. So it's a way to quickly determine if we need to be allotting more of our attention to this particular market. And then if we decide we do have an action step, then we can continue to watch this market, or we may be in a situation where we have a qualified trade, or the trade will be qualified when that bar closes in our anticipated direction. Let's take a look at some of the other markets here. The Russell's pretty choppy this morning. It's very short cycles. EMAs are all roped together. No real strong trends. Had a pretty decent move there in the, just looking for an example to see if we have any action steps. CL's pretty dead as well. So unfortunately the markets have been a bit of a snooze fest. Yeah, here's a good example. So just had 2 continuations, well, a single T. Where's my 200? Is it below? Yeah, so qualified single T here. Continuation here. Had my turn bar, so everything's still lined up for a long. I don't have a green background here yet. That's because it looks like the purple, well, oh, I have a downturn bar. Okay. But here with my DPI here, 22,212, I know that if the price reaches here, my blue line is still going to be above the purple line. My EMAs are still in order. My super trend is outside of its neutral zone. So I'm in the market for a continuation trade. So I could even put in my entry price, my stop limit order at 22,212. If the market continues in that direction, as soon as that price is hit, my order will hopefully be filled. And I'd be in a qualified trade. If it hits my red DPI price, I just want to be on the lookout for the next bar to be a continuation. So in that way we can kind of anticipate or have an action step if this bar doesn't end up being my entry. And we use stop limits. So in the event that I had my order in at this price, the market hits my opposite price, I don't have to worry about already being in. My order was never filled. I just cancel that, wait for the next entry point. So very powerful indicator, and really understanding that and getting used to it will go a long way to jump-starting your progress with Pro9 Trader. I really feel like practicing anticipating the trades, getting into that mindset, and building that as a strong foundation, it's probably one of the best habits to develop with this system, and just gets you in good habits of pre-qualifying trades so that I don't have to look at the market every time a bar plots and then reassess all my rules. I don't have to run through my checklist. I just keep a running tally. So I kind of get an overall feel of the pattern of the market for that day. So I see my 3 EMAs, all 4 of my EMAs are still in order for a long trade, so check, right? Unless there's a massive reversal, that's not likely to change. So I know that rule's already qualified, so I don't have to requalify that rule when I may get another entry opportunity. My blue line is still above the purple line. Check. That's 2 rules that are already pre-qualified. Those have been qualified, since this point. So this whole time, those 2 rules have been qualified. My super trend has been outside of its neutral zone all morning. That's 3 of my 4 rules that have been qualified this entire time that I don't need to check when I get an entry opportunity. So from here, say I didn't take this trade for whatever reason. It was too close to the high of the day. My purple line isn't far enough outside of the neutral zone. It's right on the edge. I'm just a little cautious around the high. The YM hasn't been moving very strongly, so I'm a little skeptical. I get my turn bar. Well, I already know that 3 of my 4 rules are qualified. Let's go back to my continuation rules here. So I don't have to spend any extra time qualifying this trade. As soon as this turn bar plots, I know if this green DPI price is hit, that's going to be my turn bar, what I'm going to enter on, which is my 4th rule. So I don't need to wait for that turn bar to plot because I know that's going to happen if this price is reached. If this price isn't reached, wasn't a qualified trade and I didn't get in it. So getting into that kind of mindset of keeping a running tally of the rules as they're qualified makes it a lot simpler to and quicker to hop in these trades, which can be extremely helpful for when there's a very fast moving market. We haven't really had to worry about that lately. And another thing I like about that is that it lets me make that decision ahead of time. I think one of the worst things for my decision making is when I'm in a situation where I don't feel like I have enough time to properly assess the market. Maybe there's some little detail I'm missing that would cause me not to be a little more cautious about entering that trade. But if I'm just constantly assessing the markets, I can have my action step for the next bar or 2, and that way I can make that decision already. So I know, all right, this looks like a good trade setup. I know what my DPI price is. As soon as that shows up, I'll put my order in and then wait for my trade to either get filled or it doesn't move in the anticipated direction, and we can just wait for the next qualified trade setup. I feel like when we get in those situations where we're under pressure or we're waiting until everything lines up to double check the rules, that's when we can kind of get in some tricky situations because it puts us under pressure and that can just affect our decision making. So I like to make as few decisions as possible when trading. It makes my trading day go a lot smoother and simpler, and I find it to be less stressful. So, because trading can be stressful, I'm sure we all know that. Especially once we enter that trade and it starts moving in the opposite direction, we get a little bit the market moving against us, and then you're kind of gripping the arms of your office chair, white knuckling it for a minute. So and then that can kind of double up if we're in a situation where we had to rush to make a decision and we might notice something afterwards and say, oh, I shouldn't have taken that trade. It's running into the high of the day and my purple line isn't really outside of the neutral zone. What did I do? So have it planning ahead can make our day run a lot smoother. So All right, everyone, we've got about 15 minutes left. So feel free to throw out any other questions you guys have, if you guys need any clarification on anything I've been talking about so far. Feel free to throw those out. If there are any particular trading situations you saw this week that was a little, you just want to take a closer look at, feel free to throw those out there. I do find that it is quite helpful to review some trades. And when reviewing trades, especially when practicing or even live trading, I think it's always helpful to kind of do a quick review of the week. Just kind of look back on the charts, see what markets you're looking at, see the trade setups, investigate the trades you took, try to look for trades that you missed and see why you missed them or why you decided not to take them. Look at any losing trades and see what happened with that trade. Is there anything different? Is there anything I missed? Is there something I'm noticing that can kind of keep me out of those situations? I know Scott Dahlquist, he's the host of our trading room. Over the course since he has been hosting that room, he's developed a slew of additional qualifications that he looks for that are really helpful, especially for trickier market situations. That really help him avoid some riskier situations that are appropriate for his style of trading and the level of risk he's willing to incur. So he's just noticed some things that help him decide when the market's a bit too risky. So. All right, let's see if we can find an example of some choppy markets. This TF is kind of a bit of a longer term chop. Oh, Michael's asking about this. This is actually just an image program. It's not in NinjaTrader. It's a separate program called Honeyview that I just load up images of this. I can shoot you an email with instructions how to get that after the class. So here's a pretty good example of chop. Now, of course, in hindsight, chop is easy to identify, but there are signs we can look for to help us identify chop ahead of time. Randy's asking if the trade room is included in the cost of Pro9 Trader. It is not. There is a free trial for the room. It is a $197 per month subscription. Let me see. I know sometimes they run promotions where they give you like a free week or two with Pro9, but there is a free trial for 5 trading days, so you get a week of access. That's at pro9live.com. If you want to check that out, may want to sign up so you can start Monday and just check that out and see if the way Scott trades jives with your trading style as well. So main things we want to look for to identify chop is the blue line not really heading to two extremes. Often when it's bouncing around in the middle and not really going to its extremes, that's probably the strongest sign of chop. Not always going to be the case, but often it is. Other things we like to look for the EMAs being roped together, just back and forth, all on top of each other, just, a lot of indecision, as well as multiple turn bars in close proximity. Once I get back to back or 3 or 4 turn bars very close, that definitely causes me to put on my brakes, sit on my hands for a minute, as you will often see this when our EMAs all get wrapped around each other. The price bars just go back and forth, back and forth. Purple line and histogram are generally kind of weak, not really strong in any direction. And their chop isn't always going to look exactly like that. And the simplest way I like to look at it is this, is that most of our trades we're looking for are trend trades. And it's pretty easy to see or know when there's an established trend or we're in the type of market situation that we're going to want to enter a trade. So given that most of our trades are trend trades, why would we want to enter a trend trade when there's no really clear or strongly established trend? And I feel with some chart time, it doesn't take much, and you kind of get a feel for when the market's choppy. I mean, if the market looks choppy, it probably is. If the market looks like it's not giving you good trade opportunities, that's probably the case, and you may just want to check out a different market. So I don't find it's super effective to really be married to a particular market or trade that exclusively. Especially, like, I know people who love the CL. They just want to trade the CL every single day. But I mean, the CL has been pretty spotty to me for quite a while. It's either very slow moving and choppy, and it'll give you some good days here and there, but not something I'd want to actively watch every single day. I mean, I'd pull it up, check it out, keep it on the side, and just kind of come back to it periodically throughout the day to see if it's really gearing up for anything. And some markets are like that. They go through their phases. So I always like to just keep an open mind as far as the markets that I trade. I don't like the idea of being dedicated to a market. They certainly aren't dedicated to us. So all I care about is that it moves in a way that provides me good trade setups that I can enter into. So. I mean, we have our 5 markets that we look at and recommend. These are the ones we've seen be most consistent. There are certainly other markets you can check out. I know quite a few members who trade gold. I even heard copper and silver. I haven't checked those out myself. Some of the other precious metals. I know a few that do, Brent crude, if you like that one as well. Some of the European markets, well, they do have a higher tick value and probably a higher margin requirement. They're open early in the morning before our markets open. I have like the 6E, the 6B, the FDAX. And that's really helpful for traders who can't trade during the day. I know there are quite a few people who work at a good portion of when our markets are open. So, to have that option of other markets can trade before work on the European markets. After our markets close, you have the Australian and Tokyo sessions that are open. I believe, I want to say like 6 p.m. Eastern, somewhere around there. But they're open in the evening, so I haven't checked those out myself. But if you're interested in trading other markets, just do your homework, pull up a chart, go back a month or two, see how it moves. Does it get choppy all the time? Does it provide enough trade setups on average to make it worth your while to watch? Like, I get a lot of people that ask about the ES. People love the ES. It has a high tick value. You can trade a ton of contracts on it. But with our system, it just doesn't move a lot to produce qualified trade setups. So it's, I never look at the ES. So I do look at the EMD instead, which I know many people don't like because it is a bit lower volume. So it's, it's just one of those markets that you have to be more active with. You will likely get slippage. The bid-ask spread is a little wider than on other markets. You'll probably get orders jumped over more often. So it's one of those markets you kind of have to be more active in if you plan on trading it. Not every market has high enough volume where you can, reliably place your order and expect it to get filled. So, the markets you do plan on trading, they do have their own characteristics and cycles that they go through. So you do want to just kind of do research, do some homework. It can help improve your trading. It's not, it's one of those things that's not necessary to identify trades, but it can be helpful. Diane is asking, which 6 do we look at? We actually look at 5. That would be the CL. It's one we watch, but lately it's been kind of slow, so it's not one I personally am super eager to look at all day, but I do kind of keep it on the side, just glance over at it through the day. The NQ, YM, EMD, and the Russell, which would either be the RTY if you're on the CME exchange, or the TF if you're still on the ICE exchange. So the data fees are less expensive on the RTY, but both those markets will be listed until June of next year is when they'll remove the TF from the ICE exchange. So there's likely to be some split volume, but I think a lot of people are moving over to the RTY. So it's really been picking up volume and moving a lot better than the TF lately. So those are the ones we watch and recommend to start out with. But like I said, sometimes these markets we watch just don't really do a ton. So I know people often want to go look at other markets. We're by no means saying these are the only markets that work with Pro9. There are certainly many others. But, if you plan on watching them, just do your homework because, honestly, we just can't trade every market or investigate every market all the time and be up on that. I wish we could, but just not something that's feasible. So, all right, everyone, I'll leave it open for any last-minute questions, but we are coming down to the end. I would like to thank you all for joining me. Hope you were able to pick up something new that we can apply to your daily trading and hopefully eliminate some losses or some areas of confusion that were causing us to maybe miss some trades, stuff like that. So, as always, if you guys have any questions that pop up or any suggestions for the room, any feedback, if maybe there's some things you would like covered more, feel free to send an email to support. I kind of try to throw a wide net because there are several members who do have different levels of experience in here. You may have brand new members coming in who have not really traded the system that much, and some who've been using it for a while. So I do have to kind of cast a wide net. So if there's something you want to look at specifically, it's best to either write it down and bring it up in class, or shoot an email to support. Let me know, just, hey, could you cover this next class or go over this, whatever it is. I'd be more than happy to. So. All right, everyone. Looks like there's no other questions, so I'll be signing off. I hope the rest of your Friday is great. I hope you guys have a fantastic weekend. And until next time, happy trading.